Yeah, hi friends. Right, this is Ravi Kanth Miriyala. I'm a chartered accountant from Bangalore. Right, today we'll be discussing Group 2 accounting standards revision. Okay, quick revision of Group 2 accounting standards. Yeah, Group 2 accounting standards, it's very important, especially like approximately 28 to 32 marks approximately you can expect from this. And from accounting standards alone, I am telling you. Yeah, first mandatory question that is for 20 marks is obviously from accounting standards alone. Right. The rest 3-4 questions generally they will ask in question number 7. Right. You have to focus. If you don't concentrate on the accounting standards part, then obviously you will be writing exam for 80 marks. Minimum 80 marks. Correct. No? That's it. That is maximum 80 marks, not minimum. Maximum 80 marks you write. So try to focus on these accounting standards. I hope this video will be helpful to you. Right, I already did that group 1 accounting standards revision. Those are available in my Ravi Kanth Miriyala YouTube channel basically. Okay, right. And recently we made our what is that, accounting standard discussion group. Okay, yeah, if you type in Telegram, this is a Telegram group basically. Yeah, AS discussion group. If you start typing, correct na? AS discussion group, no space, nothing. Okay, RKM Ravi Kanth Miriyala. You can join this group. If you have any question related to accounting standards, obviously you can post your question. I will be responding within a day. Okay, right. Most of the time I'll respond immediately, but anyhow I'll be responding to all of your questions. Right. And yeah, because generally the problem is sometimes they understand subject but they don't know the things correct na? Yeah, few doubts may be left. This is for everybody, anybody can join, and this will be helpful to them. And one more small point I would like to tell before starting the class. Okay, right, recently I opened our my website, that is you can see in the screen below, that is www.ravikanth, my name RAVIKANTH, ravikanthmiriyala.com. Yeah, ravikanthmiriyala.com, ravikanthmiriyala.com. Yeah, this website, yes, this is for all my books also. Yeah, students can place order. You can place an order for book, that is accounting standards made easy, auditing and assurance made easy, and for CA final books, everything is, all my books are available, latest books are available for sale. Right, if you need any book, please use, you can place an order. Will deliver on the same day. We'll dispatch it from here. It will take some time obviously to reach to you. Okay, right. So, and please inform that there is one website, because this is a recent website we have opened. Many people do not know, and here prices generally will be comparatively less than the market, that is Amazon and Flipkart. Right, you can obviously place an order through our website. So let us get into our basic discussion. Right, first basic standard what I will discuss, accounting standard 4, which will not take much time. Yeah, the heading of the standard is what? Contingencies. Correct, no? Contingencies and events occurring after the balance sheet date. Yeah, events occurring after balance sheet date. What is events occurring after balance sheet date? Yeah, it is basically very small standard, my dear friend. Okay, we'll be able to close in less than half an hour. That's it. That is sufficient actually. See, contingency word, it is there in the standard name, but it is actually not, the subject is not there. Why means, yes, I think it is in 2006 or 7 somewhere. No, not in 2006, 2003 I think. Yeah, in 2003 itself, the contingency portion has been moved from accounting standard 4 to accounting standard 29. That's why accounting standard 29 provision contingent liabilities and contingent assets has come. Okay, right. So now contingency, just name is there, contingency related matter is not here. It is already shifted to accounting standard 29. Okay, events occurring after the balance sheet date. Yeah, it is occurring after balance sheet date. Here is, let us say 31st March 2020 is our balance sheet date in all my examples today whatever discuss. Okay, sir, you're saying events. Which events, sir? Is it a small event? No, no, no. Only see, we our accounting standards. I already taught you in group one. Accounting standards are applicable to material items. It is not for immaterial items. Okay, so events means only significant events. Only significant, only significant events. Just only for significant events it is applicable. Small events, you obviously need not bother about it. Okay, right. So basically, if I say this is my financial year, what is your financial year? 2019-20 financial year, if it is. Okay, yeah, this is my 31st March 2020. This is what my balance sheet date. Okay, right. So what is happening? When do you prepare balance sheet? You prepare balance sheet as at 31st March. As on as at, both are one and the same. As at 31st March you will prepare. But we prepare as at, but we don't prepare on that date. Correct? No? We can prepare. When can you prepare? Actually, you are supposed to submit to the members of the company, right, on the AGM date. So when are you supposed to conduct AGM? General circumstance में 6 months is the time. That means actually you have got 30th 9 2020 that time. You have got till this. That means in this, correct? Na? Right. This is the last date. This is the last date. Yeah. What is the last date? This is the last date for AGM. But before the date of AGM, what is supposed to happen? Board of directors are supposed to approve the financial statements. They are supposed to approve the financial statements. Okay, when the board of directors approve the financial statements, we say books of accounts are closed. Yeah, the date on which, let us say, I will take an example of 31st August 2020. 31st August 2020, board of directors signs the financial statements. Means but that means financial statements for the year of 2019-20 are closed. Closed means you cannot pass further journal entries. That is what. So what are you talking? We are talking about those events which are taking place, correct? Which are taking place after 31st March. But till which date? Till board of directors. In case of a company, board of directors approval date. Yeah, in case of a partnership, whenever what is that? It is not a partners, managing partners. When do they sign it? That is the last date. That is any events are occurring in this period. What are you supposed to do it? That is what the discussion. That's it. Nothing much actually. So events. What should I do, sir? If any event takes place in between 31st March to 31st August in my example, board of directors approval date, what are we supposed to do? For that, events are actually classified into two kinds of events. What are those, sir? First one is adjusting events. These are adjusting. The next one is non-adjusting event. First one is adjusting. Next one is non-adjusting. Okay. First, if it is adjusting, what should I do? If it is adjusting, you should go back to, even though it happened on that after 31st March. We should adjust in the previous year financial, that is 2019-20. Yeah, then what are you supposed to do? You adjust in financial year 2019-20. You are supposed to adjust it. Yeah, if it is non-adjusting event, if it is non-adjusting event, you will not adjust in 2019-20. So, sir, when am I supposed to adjust it? You have to adjust in 2020-21 financial year. You are supposed to adjust it. Yeah. Okay, but yeah, you will adjust in 2020-21, but in the board of directors report, yes, you can disclose. It is not like mandatory. You can disclose in board of directors report of which year? Report of 31st March 2020 itself. You can obviously disclose it. You can disclose. It means last year board of directors report may you can mention it, but not as part of financial statement. Board of directors report is not part of financial statement. Just remember that. Correct. Now, financial statements include what? Financial statements include balance sheet, profit and loss, cash flow statement, and notes to accounts. But board of directors report, audit report, correct? Na? Right. All these things are obviously not part of financial statements. So it is not going to be part of financial statements. It is not going to be part of notes. It can be part of board of directors report. Okay. What about adjusting event? When do you call it is adjusting? Yeah. What did I say? When do we call it is an adjusting event? Adjusting event, it is a situation or condition. First, I will tell you the definition. Then I will explain a little bit about it. Okay. It is a situation or condition. It is a situation or condition situation or condition exist on the balance sheet date, and subsequent information gives clarity. It gives clarity, or it gives information about such situation or condition. That is what. Okay, what about non-adjusting event? Non-adjusting event means we'll simply say there is no situation or condition exist. No situation or condition exist on balance sheet date. There is nothing is there on 31st March. It is a purely a new event. If it is a purely new event, that's why should I go back and correct it in the related to last year? Yep. Now listen carefully. Generally students will get some, generally whenever they ask me question, basic questions only they are asking. That you are asking very basic question means my understanding is you did not understand the concept correctly. If you had understood the concept, you would have not asked such question. No, asking is correct. Then only we will understand you. Correct? Then only we can correct you. If you don't ask that, we cannot correct you correctly. Correct? But that I'm just telling you. It's a basic example I'll start with. Yeah, see example my dear. This is 31st March. Okay, for the month of March. Power bill. Correct? Power bill you got it. Yeah, power bill what my accountant has done. My accountant has made a provision because power bill for 31st March will come in April first week. Generally power bill will come. Right. Suppose they wanted to pass journal entries, provision entries, they wanted to pass on 31st March itself. Okay, fine, no problem. They made a provision for how much, sir? They made a provision for 5 lakh rupees power bill. Okay, they made a provision. Okay, on April 7th you received the actual bill. In that actual bill there is actually 7 lakh rupees was there. Okay, right. You closed books of account. In all my example, we closed books of accounts on 31st August. Remember, unless until I change the date, otherwise 31st August is the closure of books. That is Board of Directors approval of financial statements. Now tell me, on April 7th, I got to know. Yeah, I got to know. What I got to know? 7 lakh rupees is the bill. But what was already provided for, what are already recognized in the books of account? Only 5 lakh rupees. Now, do you say, am I supposed to go back and adjust it, or shall I not adjust it? The point is just to think. If I had got this bill on 31st March itself, what I would have done? I would have made a provision for 7 lakh rupees, correct? Then what is the point? Just a small thing is what the bill came little late, that's it. Then why are you not recognizing it? So if I recognize the 5 lakh rupees in the balance sheet, I must have said 5 lakh rupees only I am liable. Agree or not? 5 lakh rupees only I am liable for. Then actually am I liable for that date? Position is what? I already consumed 7 lakh rupees worth of power from the department, correct? Electricity department, electricity company. Right, I was actually liable that day. My position was I was liable for 7 lakh, but my accountant thought I was liable only 5 lakh rupees, and he made a mistake. Yeah, it may be mistake or estimation error, something you can say. It is estimate error, whatever happened, but he got to know that it was an error subsequent with the subsequent event, that is receipt of the bill. Yeah, receipt of the bill is making it very clear. I was liable for 7 lakh, not for 5 lakh rupees. Under that circumstance, why are you keeping it? If I presented 5 lakh rupees only on that day, isn't it wrong? Wrong. That's why what are we supposed to do? Actually 2 lakh rupees excess, 2 lakh rupees actually was consumed in the last year. If I don't record this 2 lakh rupees, then it will be recorded in the next year. That is wrong. So what is that I say? Are you supposed to go back and adjust? Yes, you should go back here and make it 7 lakh rupees or not? Yes, you have to go back. Then only it gives a correct picture. Correct. So that's why what do I say? Is it adjusting or not? Yes, it is very much adjusting event. Now situation. One more situation. This is generally asked in the examination also. Yeah, on 31st March, let us say we sold goods to Mr. X. Yeah, we sold goods to Mr. X on 31st. I mean, when is it, sir? In the month of January. How much? For worth of 5 lakh rupees goods we already sold in the month of January. Yeah, what is on 31st March? On 31st March it is receivable. We have not received any money from this man. Okay, right. Situation number 1 I am explaining. He was a good guy. Good guy in the sense it was economically good, not personally good. Okay, he has got money. Are you getting my point? He has got money, right? So there is no issue with respect to, right, one second. One second. Yeah, I repeat the example. We already sold to Mr. X. Mr. X is 5 lakh rupees of goods. It is receivable on 31st March. His credit worthiness was good. His credit worthiness means he is able to pay me. He is financially very good. Okay, right. On 31st March. Okay, fine. But subsequently, what happened? Let us say in the month of April, there is some fire accident or something, some situation has happened. In the premises of fire accident happened in the premises of the customer, not with us. Okay, na? Yeah, customer Mr. X has lost everything. Okay, in the month of May or June somewhere, correct? Now we received a notice from the liquidator. Okay, right? Whoever the receiver, liquidator, whatever the name you call. Right, saying that this guy became, what do you call, is not able to pay you money. Okay, right, he's not able to pay you money. He said insolvent. Correct, he became insolvent. Now you got to know what your 5 lakh rupees money is not going to come back to you. Yeah, that is the information you got subsequently in the month of May, June sometime before closing the books of account. Now, are we supposed to make a provision for this? Provision for receivable, correct? Na? I mean, doubtful debts. Are you supposed to make a provision for doubtful debts as on 31st March? Is it adjusting event or non-adjusting event? That is one question. Situation number 2. I will come to this. I will come here. Situation number 2. I want to explain first. I mean, 2 also I'll explain. Both answer together. In case of situation number 2, what is happening? Listen. Suppose this fire accident happened in the month of March. Yeah, now in my first example, fire accident in the premises of Mr. X, it took place in the month of April. Okay, it took place in the month of April. But in my second example, what am I saying? Fire accident took place in the premises of X in the month of March itself. Okay, and it was not receivable. I mean, this guy became insolvent already, and it was not receivable. It was not a good debt. It is a bad debt already on 31st March. But I was not aware of it. See, how do I know what is happening in the premises of Mr. X? That is in some other city. Correct, na? Right. But anyhow, as usual, I got an information about his insolvency in the month of May. Now, what should I do? When shall I adjust it on 31st March, or shall I adjust it after 31st March? That is the basic question. Got my point? Right. Listen, a balance sheet will talk about what, my dear? Balance sheet will talk about the financial position on 31st March. Yeah, in my situation number 1, was it receivable or correct? Being a debt is not the situation or condition. I have a debt. What is the situation? Situation, condition of it. What is it? Receivable in good condition or bad condition? It is a good debt. Yeah, that is good debt. That means why should I make a provision as on 31st March? Correct. Na? The event what has happened, that has happened in the month of April, that is nothing to do with 31st March position or situation. Suppose if this guy has come and paid me on April 1st itself, then there was no issue. If this guy had paid me on 31st March itself, also no problem. Was he in a position to pay you on 31st March? Yes, very much. I told his credit worthiness was very good. He is financially very good as on 31st March. Correct. So we don't need to. That's why what do I say? This is a non-adjusting event. This is purely happened in the next year. So if you want to make a provision for doubtful debts or bad debts, whatever you want to make, that you make it in the next financial year, but not as on 31st March 2020. Okay, right. And with respect to what is this? With respect to March, next example, right? He was already, what is that, insolvent. Just a confirmation of it has become confirmed. He was already insolvent. The confirmation has come in the month of May. Information got delayed. Suppose this confirmation had come to me on 31st March, what would I have done? I would have made a provision as on 31st March itself. Agree? Correct. So why are we now making it? Now correct. Now you have to make it. His position was bad and the condition of the receivable was not receivable money actually. That's why you are supposed to make a provision for doubtful debts. You are supposed to make a provision for doubtful debts in which year? This is an adjusting event. Adjusting event means 2019-20 financial year itself. You have to make a provision for doubtful debts. Yeah, with respect to this is a non-adjusting event. Non-adjusting event means 2020-21 financial year mein you are supposed to adjust for. Hope you have understood. Okay, right. And like that questions will take place. At the same time, there are some 2 exceptions to this rule, my dear. There are 2 exceptions basically. Sir, first, what do you mean by exception? What do you mean by exception? Exception means even though it is a non-adjusting event as per the basic rules, it should be treated as adjusting event. What did I say? Yeah, even though it is non-adjusting event as per accounting standard 4, yeah, but it should be accounted, it should be correct na? SHD means it should be okay na? It should be accounted as what? It should be accounted as adjusting event. Are you getting my point? Just a second. Yeah, it should be accounted as, it is strictly speaking it is a non-adjusting event, but still I am supposed to account it for. Sir, under what circumstances? There I told you two circumstances. One, when it is required by the law. Right, I told you accounting standard cannot override the law. Means whatever accounting standard says, that's it. Adu correct or wrong, accounting standard, whatever the law says na, accounting standard will not question. Right, law said do like this, do it, that's it. Okay, so if law says specifically account like this, means we have to account. That is situation number 1. And the second situation is what? Suppose subsequent event is affecting the going concern assumption of the entity. Okay, yeah, what is that? Subsequent event is affecting, what is it affecting, sir? It is affecting going concern assumption. Yeah, it is affecting going concern assumption. If it is really affecting the going concern assumption, then yes, you are supposed to consider. If you are supposed to actually link this with accounting standard 1. There also going concern assumption we have discussed na? Correct. So what does it mean, sir? Yeah, I'll tell you clearly. Okay, and 31st March, this is my balance sheet date. Yeah, let us say somewhere in the month of 30th June, what has happened? Something has happened, say corona situation has come. Okay, right, we got to know what we got to know. We are not, I mean, my business has got, I mean, fully, what has happened, spoiled. I'm not in a position to continue further. Are you getting my point? Yeah, even though you're preparing 31st August, yeah, you lost a lot of things. Okay, you lost your business, you are not in a position to continue. Correct. But assume, yes, corona has happened, all that situation has happened in the month of after 31st March only it took place. Correctly speaking, it is non-adjusting. Still, correct. Still, what are you supposed to treat it? Yeah, as if the situation has happened on 31st March. If it has happened on 31st March, what would have you done? I would have recorded all assets and liabilities at NRVR liquidation basis as I discussed in accounting standard 1. Correct. Now, you have to account for all these things as if this situation has come on 31st March, even though it is a non-adjusting event. Got it? Right. One more point. Right. This point you know it, but still I'm telling you. Right. What is this? Proposed dividend. This is one small point. Proposed dividend situation. Yeah, proposed dividend. Yeah, again, let's say for 2019-20 financial year, yeah, board of directors are going to approve financial year on 31st August. Yeah, before this only what will happen? Board will meet one more time and board will come with a proposed dividend. They will say, hey, this year let us distribute 1 lakh rupees or 10 lakh rupees or 10 crore rupees of money as a dividend. Okay, let us distribute this. But listen, name itself is telling it is a proposal. What is this? Proposal. Right, listen carefully. This is for which year dividend? This is for the financial year 1920 only. I agree. This is for the financial year 1920. Correct, my dear. This is for 1920. But it is a proposal. What a proposal means what? One side only. It is not two side. It is not an agreement. When will it be agreement? I keep a proposal with you. Correct, na? But you should agree to the proposal. Then only, yes, this becomes a contract. Proposal is one-sided. Correct. Today, even though it is proposed by the board of directors, is it a liability to the company? No, it is not a liability to the company. Companies, it will become a liability to the company when, sir? When it is a liability only when it is approved by AGM. Only when it is approved by, only when it is approved by AGM, this becomes a liability. Till that date, it is not a liability, my dear friend. Correct, na? So that means it is not a liability. It is not liability. Okay, sir. When will it be AGM? AGM may happen on 30th night. So on 30th 9, yes, if it is approved by the members of the company, then that date it becomes liability. Today it is a proposal, right? So that's why it is not a liability on 31st March. On 31st March 2020, it is not a liability. Correct, na? Yeah, being a member of the company, can you come down and ask the company, they pay me my dividend? What company will tell? Get lost first. That's it, because who approved it? On 31st March, you don't have a right to ask the company. Member will get the right only when it is approved by the AGM, my dear. That is about your accounting standard 4 revision. That's it. There's nothing much with respect to accounting standard 4, my dear. Okay, right. Let us now get into which is the next standard. Let us get into accounting standard 5. Yeah, this is also not much actually. 4 topics. Basically 4 topics are there. Okay, heading में 3 topics are there. In addition to that, one more topic is there. Yeah, once we discuss that 4 topics, this accounting standard 5 also will get over. What is the heading? It says net profit or loss for the period. Next, prior period. 1 second. Yeah, prior period items and change in accounting policies. Yeah, this is the heading of the standard. Yeah, this is topic number 1. This is topic number 2. Change in accounting estimation. That is one more topic is there. That is topic number 3, and that is not part of heading, but doesn't matter. That is also a topic. Yeah, this is the topic number 4. Yeah, net profit or loss. With respect to net profit or loss, what is the first point? It says, every item of income or expenditure. What do I say? Every item of income or expense. Every item of income or expenditure should be routed through P&L. It should be routed through. Yes, it should be routed through P&L. It has to be routed through P&L only. Right, unless it is a requirement of law, or unless it is a requirement of any another accounting standard. Another accounting standard means what? If law says no, don't take it to P&L, then you shouldn't take it. Or if any other accounting standard says, then don't take it. Otherwise, any place if the profit is there, word, loss is there, income is there, expenditure is there, it has to be routed through P&L. That is the basic thing. Unless there is a specific information given by the law or accounting standard. Okay, right, my dear. First, accounting standard 5. This is also like basically disclosure standard. This is a disclosure standard, not accounting. Accounting recognition is nothing much. Okay, disclosure. Yeah, what are you supposed to do, sir? These items are activities. Okay, the items of P&L. Items of P&L, what is happening, are getting classified into 2 types. What is it? Those are, first one is ordinary items or ordinary activities. Okay, next one is extraordinary activities. Extraordinary items or extraordinary activities. Any word you can use it. Okay, right. What is ordinary, sir? Yeah, simple. First I'll explain it. I will give obviously later examples. Yeah. So what is ordinary? Ordinary means it is a part of business. Correct. Day-to-day business activity. Day-to-day business activities. Yeah, and it is incidental to business. It is incidental to business. Yes, incidental to business. Yeah, suppose you received some commission. It is part of business. You paid some commission. Yes, it is part of business. Business may commission giving, commission taking is normal. It happens. Correct, na? Yes, sir, I am doing some woodwork. I am doing some other work. There is some scrap is there. What should I do? A scrap, I will sell it off. So you will get some income on sale of scrap. Just because you will sell the scrap and you will get some income on scrap, you will not become scrap seller, no? Correct, na? I am a seller of finished goods, not scrap. That is another income. Are you getting my point? Yeah, at your home also you will get newspaper daily. Correct, na? What do you do after a month or 2 months? What do? You may be selling, assume, yeah, you may be selling 1 kg 10 rupees. You sold 10 cages, 100 rupees, you got it. Or you seller of newspapers, that is not your business. Nah? That is incidental. Here, when I am purchasing book, why should I throw it? And correct. Now, if I throw it, that is not going for recycling. You're doing actually wrong. Yeah, you should keep it separately. You should sell it. That is only good. Nah? Yeah, you may get some small money. Money is not important. That will be useful to some. That will be useful for at least recycling purpose. It will be very much useful. Got it? Fine. So incidental. It is incidental to business because of the business if it is happening. Okay, right. And what do I say? One more word I use it here. Expected to occur. Expected to occur as part of business. This is more important. Yeah, because business is there, it is very much expected. Yeah. At the same time, in extraordinary item, what do I say? It is not expected. Not expected to occur. Not expected to occur. Yeah. In the business, when you are in the business, I am not expecting. Sir, business में ऐसा नहीं होता सा. Then it is business में नहीं होता, but it is happening right now. Because of my business, it is suppose earthquake takes place. Is it because you are doing business? No. Then it is obviously an extraordinary activity. Correct. Natural calamities are taking place. Is it because you started a business? No. It is nothing to do with my business. Then it is extraordinary item. Are you getting my point? Any accidents takes place, but not general. Routine business related. Is it related to business? Then yes, it is ordinary item. That is important. Okay, right. So it is ordinary. So if it is ordinary means what do you say, sir? The ordinary means generally no separate disclosure is required. Generally no separate disclosure is required. Yep, there is no separate disclosure is required. Then what are we supposed to do, sir? Yeah, generally no separate disclosure is required if it is ordinary. But even though it is ordinary, but under exception, but yeah, but what do we call? If such event is what? It is significant. Yeah, it is a significant. Significant in what? Significant in nature. I mean different item or significant amount. Or based on, instead of significant, I will say based on the nature. Okay, based on nature, based on amount, based on the incidence of the transaction. Means under what are the circumstance, under what circumstance it took place. Okay, incidence based on the nature, amount, incidence of transaction. Incidence of transaction, right? It may requires a separate disclosure. When I say it may require a separate disclosure, my dear friend, it is a judgment. It is obviously a professional. It is a professional judgment. Okay, right. Such item only what we call, we use, it is not used in the standard, but practically what do? We use a word called exceptional items. What do we say? These are all exceptional items. We call them as exceptional items. So if it is an exceptional item, okay, how it is exceptional is based on the nature. Somebody can decide, right, this is not, yeah, this is because of business only, but it is not a general routine. I would like to mention this. Mention professional judgment. Amount is big, sir. Example, my dear. One small example I'll give. Suppose you got a profit. Yeah, you got a profit. Profit on what? Profit on sale of fixed assets. Okay, or loss on sale of fixed asset. Or investment you sold. You got a profit or you got a loss. Fine, it is possible. Correct. Is it ordinary or extraordinary? Very much ordinary. Why, sir? Yes, my dear. See, when you buy the fixed asset, when it is not useful to you, what do? Will you keep it with you only throughout life? No, obviously we'll sell it. When you sell it in business, we do buy fixed assets. When the life is over or when it is not useful for the requirement, we will sell it. That is very much expected to happen. Yeah, it is not my ordinary day-to-day business, but it is incidental to business. I'll buy a machine, not useful, throw it off, I'll buy another one. That's it. Yeah, when you are selling it off, then you may get a loss, you may get a profit. Correct. Investments also. Yes, it is. I'm not a trade. I'm not a routine buyer seller. I'm not trading with it. Correct. But yes, I bought. Okay, today I purchased Infosys company shares. Okay, after some time it has gone up very good amount. Then I wanted to sell it off. Yeah, I make some money. Nothing wrong. But that is not extraordinary. That is very much ordinary activity. Are you getting my point? Yes. So, but what is that? You got how much amount of you got, sir? I got 2 lakh rupees of profit. I got. Assume 2 lakh rupees is material to you. See, considering the amount and nature of nature of the transaction. Yeah, management may show it, but generally for 2 lakh 3 lakh rupees they don't show it. But suppose we sold one, so right, we sold one, what do you call that? I told you it is a professional judgment. It's purely left to you. It is purely left to you. If you want to show separately, show it. Okay, right. There is one more word called like impairment of fixed asset. What is that? Impairment. This you have not studied, obviously. Impairment of assets. Impairment of assets is governed by accounting standard 28. Assume we did impairment in the current year. If we tested for impairment and there is a lot of impairment, how much, sir? Let us say some 200 crore rupees, there is a loss, impairment loss is there. It's a big number. Correct. I wanted to show it separately under exceptional items. Yes, you show it separately. Correct. Na? Next, yeah, valuation of inventory. Okay, valuation of inventory at NRV. At NRV. Correct. Now we checked, as you know, accounting standard 2, cost or NRV, whichever is lower. Say cost is equal to 100, NRV is equal to 80. Now you have to book, you have to record the inventory at 80. Correct. Is it ordinary or extraordinary? Very much ordinary. If there is a huge loss, sir, 20 rupees is, in my example, 20 may be less. Suppose 20 into 120 crores items. Okay, so big number now. Correct, na? So 400 crore rupees is loss, sir. 400 crores, big item. Now I will now show it separately. Yeah, don't put it under other items or miscellaneous items like that. It requires a separate disclosure. That is about ordinary and exceptional items. What is extraordinary? Standard actually says, na, which is not ordinary, that's it. Which is not ordinary is extraordinary. Yeah, which is not ordinary is extraordinary. So what are the examples for this? I'll say earthquake. Yeah, earthquake. Or natural calamities. Natural calamities. Yeah. As per accounting standard 12, my dear, there are some more points are there. As per accounting standard 12, what do you say? Refund of government grant. Yes, refund of government grant is an extraordinary item. Okay. Next, one more thing is what? One more thing is attachment of property by government. Attachment of properties by government. Yeah, government. What do you mean by attachment of property? They are seizing. Government is coming. Enforcement director is coming and seizing it. Then what is it? The government will not come to my house or your house and they'll seize our properties unless until we do something extraordinary. Otherwise, government will not enter our premises. Do you agree? Correct. It is not expected because you are doing business. You are doing wrong business. But wrong business is not the business. Correct. Na? Right. Thief cannot say this is my routine activity. Correct. Na? Ordinary, sir, don't take me to jail. So don't tell me all those jokes. Are you getting my point? Yes. So my dear, yes, attachment of property by the government. This is obviously extraordinary. Right? These extraordinary items, what are we supposed to do? Yeah, if you remember your P&L format as per schedule 3, my dear friend. Yeah, what is there first? Revenue, sir, revenue from operations, other income, then total revenue, expenses, correct na? Consumption, change in the FG, correct na? I mean finished goods and raw material. You have seen the format. Correct, depreciation, amortization, fixed cost, other employee benefit expenses, other expenses, then profit before tax and extraordinary exceptional items. There you will write extraordinary items, then exceptional items, then you will say tax expenditure. Agree? Those are these extraordinary and exceptional items. There you have to present it if it is extraordinary and exceptional in nature. Got it? Perfect. Now let's go to the second topic. What is second topic? Second topic is prior period item. Yeah, prior period items. From the name itself, you can make it out. It is related to last year. Prior means what? Last year. What is the standard saying? This is an income or this is an expenses. This is an income or expenditure. Okay, it is related to last year. Yes, it is related to previous year. Okay, then what, sir? But it is recorded in the current year. It is recorded in the current year. Why? Correct, na? It is last year, so last year only should have recorded, na? Correct, sir, such hai. But I couldn't record it. Why you couldn't record it, sir? Yeah, because of this error. Error. Or omission. Yes, or omission. Forgot, sir. We missed out, sir. Correct, na? Right. What is error, sir? Error means, again it says, errors means it can be a mathematical error, Yes, something calculation mistake has happened, or wrong application of wrong application of policy, not accounting standard, accounting policy. Okay, accounting policy. Yeah, they told very clearly in the accounting policies you should follow WDV method. My accountant followed SLM method. अरे क्यों ऐसा follow? Sir, easy sir. That easy means that is error only. Na? Whatever we said, that only should follow. In the notes on accounts, you said something, but you are following something else. Then correct. So next, wrong interpretation of facts. Yeah, wrong interpretation of facts. Means what is this, sir? Happened is something, but people understood something else. Then if you understand something, then obviously you'll account something else only. Correct, na? If I know the transaction correctly, then I will be accounting it correctly. If I don't know transaction, then obviously don't expect that I will do correct account. Got it? Right. So that's why, my dear friend, it is wrong interpretation of facts took place. Omission. What do you mean by omission? Omission means information was available. Yeah, information was available while preparing. Yeah, information was available while preparing financial statement, but not considered. We had information, we missed out. That is our mistake. Yeah, generally what is the example we will give? Let's say inventory, that is stock take, inventory count. Yeah, we told our people, count properly every inventory. They forgot to count one portion. Yeah, subsequently after financial statements are signed, then they are coming and telling, sir, this I forgot, sir. Now what can I do? Inventory was with you, correct? Na? Isn't it your own mistake? Own mistake in the sense, not that one person mistake, your team mistake. You should have, if you had applied the knowledge and if you had everything, na, you should have taken that also. You should, that value also would have come into inventory valuation. Correct? Isn't it? Omission of information. Yes, it was available, but I couldn't consider. Fine, omission. So understood? Right. So that is why, what do we say? Yes, if it is an income or expenditure related to previous year but recorded in the current year, yeah, okay, why is that? It is because of, correct, because of error. It should be because of error or omission. If there is no error, if there is no omission, then it is not prior period item. Okay, sir. If it is a prior period item, so kya karna, sir? Kya karna? So again, this is also, yeah. If it is material, see, always I say, if it is material, big number. If it is material, then you are supposed to separately disclose. Yeah, separate disclosure is very much required. Where to disclose, sir? In between, what is that? Exceptional, extraordinary items, that same place you are supposed to disclose. The standard is not giving first prior period should come, nothing like that actually. First prior period only you write, first extraordinary you write, first exceptional you write, whichever you want, write before tax you write, that's it. More than sufficient. Got it? Right. So you are supposed to say separate disclosure is required if it is material. If it is not material, ignore. Chod, that's it. Got it? Then this is with respect to, my dear, what? Prior period item. Now next point, what do I say? Yeah, next point, what I say? Third topic, number 3 now. Yeah, topic 3. Topic 3 is change in accounting policies. Yeah, change in accounting estimations. First I will do change in accounting estimation. Yeah, what do you mean by accounting estimation, sir? What do you mean by accounting estimation, my dear? Accounting estimation is something. When do you do estimate? First of all, when there is no precise mean. Mean means way. Correct, na? When there is no precise mean. Yeah, when no precise mean. Mean means a way. Correct. When there is no precise mean. Correct. What is the life of this building? I don't know exactly. Correct. That means can you measure it? No, it's not possible to measure. Then you estimate it. Correct. Tell me, you have so many what do you call accounts receivable, debtors. Tell me how many people will not pay. How do I know? Yeah, estimation to karna padega. What is the fair value of this item? Correct. Now I have shares. It is not listed company. It is unlisted company. Can you tell me what is the fair market value of the share? How can I tell? If it is listed company, so I can tell very clearly. If it is unlisted company, how can I tell? I cannot tell very clearly. Got it? right? So all the provisions basically are what? Accounting estimation. Correct. When there is no precise mean, we'll go for estimation, right? So estimation means what? Estimation is it? What is that? Exact number? No, no. Estimation means it is accuracy of it is not accuracy. Obviously, you cannot be. Yeah, can it be revised or not? Yes, yes. It should be revised. It should be revised when subsequent information is available. When subsequent information is available. Yeah. Say example, I made a provision for doubtful debts. I made a provision for doubtful debts. Got it? Right. Okay. I made a provision for doubtful debts for 2 lakh rupees. People will not pay, sir. Fine, no problem. But subsequently, I got to know. No, no, no. 2 lakh nahi re. 3 lakh rupee. 3 lakh rupee paisa nahi aayega. That I got to know in the next year, not as of 31st March. Next year you increase it by another 1 lakh rupees. 2 lakh will become 3 lakh. So is it an error? No, 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 it is not an error. It is an estimation mistake. When I was estimating, I have considered everything whatever was available. That date on 31st March 2020, 2 lakh was correct based on the information available. Okay, but subsequently situation is getting changed. Correct. Now due to corona, people don't have money. They are not going to pay me money. That's why I want to increase my provision for doubtful debts. Correct. This is change in estimation. Change in estimation to how to account for. Actually, standard does not say anything. Accounting standard 5 is not telling what to do. Okay, but based on the other standards, if there is a change in estimation, account prospectively. Account prospectively. Yeah, account prospectively. Yes, you are supposed to account prospectively. Right, and at the same time, if the effect due to this if the effect is material again, if the effect is material, what are you supposed to do, sir? This also you are supposed to disclose it separately. This also you are supposed to disclose separately. And the accounting estimation is obviously not a prior period item. It is not a prior period item. It is obviously not a prior period item. Hope you have understood this point. Yeah, change in estimation is not a prior period item, my dear friend. It is just it is just accounting estimation. We know very well while we are estimating, that time itself I know that I will not be able to make it correctly. Then nothing wrong. Correct, na? Perfect. So that is with respect to change in accounting estimation. Yeah, at the same time I tell you a small example. Say example, I bought a fixed asset. Cost of fixed asset is equal to say 1 lakh rupees. Okay, I thought 10 years is the life of the machine. Assume I am following SLM method and residual value is equal to 0. Okay, then obviously per annum depreciation is coming to 10,000 rupees. Correct. Say 4 years are over. SLM method na 4 years are over, though 40,000 rupees depreciation has done. Now today 60,000 is the balance. Yeah, during the 5th year I got to know. Correct. Na? Actually it is supposed to work for another 6 years, but it started giving me trouble. Correct. It's not working properly. That mechanic or engineer came out and he said, Ravi, it will work only for 2 more years. It will work only for 2 more years. 2 more years means what should I do? E30, 60,000 rupees should be depreciated prospectively. Change in life. I thought 10 years, but it has become how much? 6 years only. Now you should not go back and correct it. No, not required. What should I do, sir? So 5th year depreciation is equal to how much? 30,000 rupees. That's it. That is what you are supposed to do. Next year also 30,000 rupees you are supposed to do it. Prospectively. What do you mean by prospectively, my dear? Prospectively means without considering the past. Without considering the past, you are supposed to account for. Okay, perfect. And next point, that is a topic number 4. Yeah, topic number 4 is actually we have dealt in account, that is accounting policy change. Yeah, accounting policy change. Yeah, accounting policy change. Listen here, as per accounting standard 1, we say a consistency should be maintained in following accounting policies. What do you mean by consistency? Consistency is something, correct na? We assume that previous year policies are followed in the current year. Correct. But does it mean that you should not change policy? No, no, we can change policy. When can you change? When it is required by law, when it is required by law, when it is required by accounting standard, when it is for better presentation. You are supposed to change the accounting. You can change the accounting policy. Okay, right. So if you are changing accounting policy, right, what are you supposed to do? Here only disclosure part is given by the standard. Okay, what is given by the standard, my dear? Only disclosure part is given. Right. Sir, what should I do? Accounting, sir. Yeah, is there any accounting? Actually, accounting standard 5 is silent on accounting. It is silent on accounting. Yeah, they have not told anything what to do. Nothing they said. Okay, sir. If they are silent on accounting, my dear friend, kya karna? Kuch, I mean, but what should I do, sir? Actually, no accounting standard it is talking. So that's why what you can do, IND AS can be taken as a base. Why you can take IND AS, sir? See, IND AS is followed by India only, by other all big companies. So when my standard is silent, I can give due respect to IND AS and I can explain that. That's why what am I saying? By taking the IND AS as an example for my work, by taking IND AS as an example for my work, what do I say? You follow retrospectively. Retrospective accounting should be done. Retrospective accounting should be done. Yeah, because our standard is silent. Based on the IND AS, I am saying retrospective accounting. What do you mean by retrospective accounting? As if new policy is followed from the beginning. As if new policy is followed from beginning. Okay, right. You are following the new policy from the beginning of when you bought the assets. Na? That time what was the policy? Other policy you are following till date. Now you should go back and come back. That is retrospective application. Okay, right. That is retrospective application. You are supposed to follow it. But remember one small point. There is a change means what? Sir, already one old policy is there. I am not following this. I am following a new policy. This is what change in policy. Got it? Right. If you do not correct, if there is no change, suppose sir, no, so far no policy was there, sir, but now I brought a new policy, sir. You brought a new policy, but it is not in the place of old policy. Correct. So then it is not change. Such things are not change in policy. Okay. Suppose there is no policy for pension so far. Pension to employees. Now we created a policy. Creation. This is not a change. Change means what? We had old policy. We removed it and brought it. Got it? Change is different. Creation is something different. Hope you understood accounting standard 5. This is more than sufficient. I have considered almost every important point. Got it? Yeah. So now 1 second. Yeah, let us look at now accounting standard 29. Okay, accounting standard 29. What is accounting standard 29 name? That is provisions, contingent liabilities, and contingent asset. Correct. Yeah, we can say these 3 names of the standard. I mean, this first one is topic number 1. I can say topic number 2, topic number 3, like that. Okay, but in addition to that, also there is one more small topic is there, which we'll discuss. Not one more, 2 more are there. Done. Yeah, but out of all those things, provision is the major one. Yeah, that if you understand, these other topics are actually small ones. Nothing much actually involved in this. Okay, what do you mean by provision? Yeah, it says very clearly provision is a liability. First, it says provision is a liability, which is measured by significant degree of significant degree of estimations. Yeah, which is measured by significant degree of estimation. There is a lot of estimation is involved. Yeah, generally people say like, sir, provision for rent. Yeah, provision for rent what is there? Why do you use the word provision for rent? It is not correct actually. The wording is not correct. Why, sir? Yeah, you know, what is the last month bill? As per the agreement, how much I should pay for the March month? I know very clearly. Where is the estimation is required? Provision word should be used when there is a significant degree of estimation. There is nothing like that. So then what do I say? This is rent payable. That's it. Rent payable. This is outstanding liability. That's it. It is not going to be a provision for rent. That wording is not supposed to be done. Yes, it is a liability, but name it as outstanding liability. Correct? Na? Right. There is no significant degree of estimation. Can I use the word provision for doubtful debts? Yeah, I also used it just now. I remember that. Yeah, can I use the word provision for doubtful debts? No, you shouldn't use provision for doubtful debts. Why, sir? There is significant degree of estimation is there, but is it a liability? Are we supposed to pay? What do you mean by provision for doubtful debts? Debtor who is supposed to pay me 1 lakh, he is not going to pay 1 lakh. Correct. Now that means what is supposed to come is not coming. It is a reduction of asset, but it is not a liability to pay. Liability means where my economic benefits are going to be out. Right. Correct word is supposed to be allowance for doubtful debts, my dear. What is it supposed to be? It is allowance for doubtful debts. Yeah, it is allowance for doubtful debts, but it is not correctly worded. The provision is not correct at all. But you, me, everybody started learning from the beginning, no provision for doubtful debts. That's why we use the language like that. But anyhow, our accounting is correct. Even though we use the word provision, do you show it as a liability under the balance sheet? No, we deduct it from the respective debtors. That's why accounting wise correct. Terminology wise, we are not correct actually. Okay, perfect. So what is a liability, sir? Liability is what? Liability already explained, but again I will explain. Liability is a present obligation. It is a present obligation arising from past events. It is a present obligation arising from past events. Yeah, it is a present obligation arising from past events, and on settlement of which, yes, we have to settle it. On settlement of which expected future economic benefits outflow from the entity. Expected future economic benefits outflow from the entity. That is what. Sir, what do you mean by present? Present means, yes sir, present is something which is not absent. Right? Not like that. Present is what? Present means it exists. I am present, sir. Means what? I am there, sir. There means when you are there, I am there on the balance sheet date, sir. This is a liability. Okay, it exists on the balance sheet date. Yes, it exists on the balance sheet date. How do you say, sir, it is existing on the balance sheet date? Is present or absent? How do I know? Yes, it may be a contractual obligation. Correct? No? It is a contractual as per the law. Agreement, I am liable. Agreement shows I am liable very clearly. Fine, then you are contractual. Or it could be a legal obligation. As per the law, I am supposed to provision for a tax. I have to pay income tax. Is there any contract between me and department? No, I am not interested to enter into only. Right. But still, am I liable to pay? Yes. Why? It is as per the law. Okay, right. It is next point. What do I say? One second. Behaving differently. Yeah. So it could be what is that? It could be a legal obligation. Yes, as per the law, it could be an obligation, legal obligation. And the third point, what I say, it may be, right now I was not aware it on 31st March, but events occurring after the balance sheet date is telling me, hey, you are only liable. Like you lost a case. I was thinking I will win the case. That's why I did not make a provision for the loss. But subsequently, what has happened? Subsequently, I got to know I only lost. Judge told me, correct now. But it is an event occurring after the balance sheet date. But judge was telling what? I was liable on 31st March itself. That's why I got to know what? Events occurring after the balance sheet date. Events occurring after balance sheet date also will tell me whether it is present or absent. Okay, done, sir. What else? Yeah, maybe an expert opinion. Yes, an expert opinion is, he is telling, I don't know exactly. Expert is telling, I am liable on 31st March. Then it is you are liable. Yeah, maybe it is, actually, there is one more word called constructive obligation. What is the word? I'll write that word. Constructive obligation. Yeah. Sir, what is constructive obligation? Constructive obligation is, it is not contractual, it is not legal, it is like a business custom. Correct? Now, to maintain good relationship with the customer, we will be doing some activity. Yeah, say example, I'll tell you. See, I purchased someone one mobile. Yeah, along with mobile, they will give me one warranty card or something. So they are liable for contractual obligation because they give me a contract. As per the contract, they have to serve me if there is any problem with performance of the mobile for next 1 year. Correct. But assume I purchased one product, but they have not given me any warranty card. They have not promised me anything for that. Okay, cool. They have not promised. Perfect. I don't have any problem. But next question is what? But my customer is my company. What are we doing? If any customer comes out with a problem, now I am serving actually. Even though it is not a contractual obligation, because of the business practice, क्या बोला, business customs or practice, what are we doing? Customer has a problem. See, that is how we want to maintain good relationship with the customer. Yeah, customer comes, sir, I purchased some 6 months before. See, problem is there. Then we are repairing and giving it. Even though it is not a contractual, such kind of things. Correct. Na? Whenever customer is buying, what he will keep? He'll keep in mind, oh, this guy will serve at Pakka. So it is not a contractual obligation, but it is an obligation. How you say, sir, obligation? If I don't do this, na, for example, if any customer comes and says, so far you did it. Tomorrow if you say, no, I don't do it to you, you are doing this at the cost of goodwill. You will lose the goodwill. That's why indirectly it is binding. It is indirectly binding because of your action. That is constructive obligation. This beautiful word is used by IND AS 37. Not here, but doesn't matter. Good things you can always take. Okay, perfect. Sir, liability. Liability is a present obligation. What is a present obligation? Obligation is nothing but a duty or responsibility is what something obligation. Where I am supposed to correct. Responsibility. Yes, it is. I am supposed to do it exactly. I have to participate. I have to close it. Getting my point? Done. Next, arising from the past events. Past events are what the standard says. Past events must be obligating events. Kya bola? Obligating events means what? Binding event. Binding event means I cannot skip. I have to pay. I have to lose money. Then only liability will be out. It is not liability is obligation, duty. It is not a right. It is not my choice. I have to pay something and get out of the liability. I have to pay something and I have to get out of the liability. It won't be out. It won't be out without losing future economic benefits. That is what future economic benefits outflow from the entity, which is very clearly given to us. Hope you understood that. Right. So settlement of obligation actually. Now see, when I explained you liability definition, I mean long ago, correct? Na? I mean when I'm doing the other group 1 accounting. Right. Actually, for liability definition, there are two conditions. Same two conditions are as part of even provision. When can you recognition, sir? These three conditions are there. That is just extension. Recognition, three conditions. When anyone satisfies all the three conditions, if you satisfy, then we say we make a provision credit. Yeah, provision is a liability, we'll credit it. Correct, na? Yeah, we will credit it only when you satisfy all the three conditions. Okay, what are the three conditions? First condition is what? Present, first line only, first line of liability. From here to here. That's it. That is the first condition. Okay, what is it? There is a present obligation arising from past events. Yeah, arising from past events. Yeah, there should be present obligation which is arising from past events. Then that is the first condition you should satisfy. Okay, next condition is this. Next to first condition, second condition, third condition is liability conditions basically. What are those, sir? That is probable future economic benefits outflow from the entity. Probable future economic benefits outflow from the entity. Yes, probable means I already taught you. Probable means what? More than 50%. It is what is that? Most likely than not. Correct. It is expected that there will be an outflow of future economic benefits, more than 50% chance. Okay, third, it can be measured reliably. You should be able to measure. Reliably means reasonable measurement, not baseless measurement. Some reasonable, reliable measurement is there, means more than sufficient. Yeah, reliably does not mean accuracy. It is impossible, man. First only I am telling you. Significant degree of estimation. When I say estimation, how is accuracy possible? Correct, na? It is not possible, obviously. When you satisfy all the three conditions, then you are liable to you are supposed to make a provision. Correct? Now, this basic example I'll start with. Okay, suppose a provision for warranty. Sir, can I make a provision for warranty? Yes, yes. Right. First, condition number 1. Will it satisfy? It will satisfy. How, sir? What is the past event happened? Sir, past event is sale is the past event. I sold goods. That's why I am liable. Do you have an obligation? Yes, yes, I have an obligation. I promised him. It is a contractual obligation. If the customer has any problem with respect to the product I sold, he can come and get my services. I am liable. So present obligation is there. Yes, it is there. Does it exist? Are you liable? Yes, I am liable. So condition number 1 satisfied. Is it probable future economic benefits outflow? Yeah. Say example, I sold 1 lakh products. Correct. I sold 1 lakh products. I cannot say all 1 lakh people will come back. Sir, all 1 lakh people will come back. Better you shut down the company, man. Such kind of worst product you are making, isn't it? So out of 1 lakh products we sell, okay, maybe 1% of products may come back. Correct. Now, by saying like defective product or something like that, it is possible. Correct. Now, so something correct. Like some things pakka will come. Let it be Apple company product, iPhone. Correct. How does it matter? Maybe international company, still problems will be there. Let it be Microsoft product. Yeah, Microsoft also makes so many hardware items. Correct. Now, there will be problems. Right. See, there is no company product like where there won't be any problem. Yeah, maybe ISO 9000, 10,000 or 20,000, it doesn't matter. Correct? Na? Still problem will be there. Is it probable? Pakka problems will come. Because of it, I will be losing economic benefits. Correct? I have to serve them or I have to replace the product. Something I'm supposed to do it. Not done, sir. Can you measure it reliably? Yeah. Some estimation, reasonable estimation so kar sakta na. Yeah, look at the previous year. Look at some other companies' products. Sir, nothing first year, sir. I don't know anything, sir. Sir, kuch guess karo na. कुछ तो कुछ गेस करके रख सकता है ना सम नंबर yes you can keep first year yes for everybody some estimation next year onwards experience आएगा experience the estimation is supposed to be better that's it you are supposed to do like that. Next one question I will say I asked one person, sir, you right what we said, sir, come and teach us. Okay, when did you go to him? We went to that person in the month of March. We asked him, sir, please provide some corporate training to us. Fine. He said, I will charge 1 lakh rupees for my corporate training. Sir, we will pay you. But are you coming in the month of March? No. March month I am very busy. Schedule is not there. Okay, in the month of May I will come and I will teach you all the classes. Then you should pay me 1 lakh. Fine, we'll pay. Correct, na? Right, we agreed. That yes, he is going to come in the month of May and he will teach us. We'll pay him. That's not an issue. Got it? So now the question is what? Basic question you understand. Basic question is, am I supposed to make a provision on 31st March? First question. Are you supposed to make a provision as of 31st March? Are we liable to that person? 1 lakh rupees? First question. Generally, students will be getting confused here. Where is the confusion? Very simple, my dear. On 31st March, are we liable? First, you should ask question. Are we liable? We told him like you come and teach and I will give 1 lakh. Correct, na? But when he comes and teaches, then only I am liable. Na? On 31st March, has he provided services? No. Then how come we are liable to him? That's it. Other way around you will see. Ulta. Can that person come to me and ask, hey Ravi Kanth, pay me my 1 lakh on 31st March? He cannot. So when it is not receivable for him on 31st March, then how come it is payable for me on 31st March? Isn't it? So, not correct. I mean, that is not a liability. That is not a liability on 31st March. So, we should not make no provision should be made on 31st. One has to understand this point very carefully. Correct? Na? Sometimes when we see from our angle, we may get confusion. But don't worry, when you are getting confused, now what are you supposed to do? Look at from the other person angle. Then 99% clarity will be there. Okay, right. One more small question. With that small question, I will close this provision topic because provision, that's it. This is the maximum amount of information. Sir, provision are we supposed to discount for the provision? Discount means present value. Discount means present value. Sir, I am supposed to pay, let us say 1 lakh rupees. 1 lakh rupees at which year, sir? 1 lakh rupees at Y3 I am supposed to pay, sir. Yeah, as per the provision, I am expecting that it is supposed to be paid after 3 years. Now 1 lakh is not exact number, estimated number. So shall I record it at 1 lakh or shall I record it at present value? Present value of 1 lakh rupees. Right. For this question, first we will ask one question. Is it directly attributable to? Is it directly attributable to PPE? First question. Are you making the provision? Is it because of the PPE? So answer can come out what? Answer can say what? No sir, it is not because of PPE, or answer can be yes. It can be yes. The minute if you say no sir, it is not related to PPE, no discounting required. Yeah, no discounting required. We don't need to discount for. Means what? Record at 1 lakh. That's it. Record at 1 lakh. That's very simple. Don't discount, record at 1 lakh rupees. Perfect. What about if it is yes? Yeah, I'm liable actually. I mean, sir, it is directly attributable to PPE. Then discount it. Discount it. Means what is the example, sir? It's like provision for restoration. If you remember, I taught you this in accounting standard. Provision for restoration, provision for decommissioning, or correct, na? Provision for decommissioning, restoration, those things basically. Okay, yeah, provision for restoration. Yes, you are supposed to discount it. Sir, which rate, sir? What rate I am supposed to discuss? You take Government of India bond yield rate. Yeah, which rate I am supposed to take, my dear? Government of India bond yield rate. Then generally examination they will only give the rate. So then what are we supposed to do? 1 lakh rupees into, say, Government of bond India 10% assumption, not even 5% right now. Okay, just example. Then what am I supposed to do? 1 divided by 1.1. 1 point means 10% is 0.1 only, na? To the power of 3. Okay, then I will come 75,000, 0.6756, something like that, correct? Na? 75,100. Yeah, 75,100 will come. Example. Yeah, day 1 Y0. What am I supposed to do? First, what should I do? PPE account debit. In accounting standard 10, I told the present value of provision for restoration should be added to the cost of PPE. That's why I'm debiting to PPE. To what? To provision for restoration. I am supposed to do provision for restoration 75,100, 75,100. Yeah, since this is added to PPE, then what are we supposed to do? Since it is added to PPE, since it is added to what? PPE, हम क्या करना? Since it is added to PPE, what are we supposed to do? It will be depreciated as per accounting standard 10. Yeah, how to depreciate? You should look at 10. Sir, but a liability 75,100, na? Yes, as of today 75,100, but I am supposed to pay 1 lakh rupees after 3 years. Increase the liability. That is called unwinding. What are you supposed to do? Unwinding the liability. Means what do you say? Finance cost or interest cost, something like that you should say. Finance cost account debit to provision for liability. Yeah, at the end of the first year. This is Y0 means beginning of the year. Y2, correct? And Y3. Yeah, what should I do? 75,000 into 10%. At what rate you discounted? At the same rate you should reverse it. Yeah, so 75,000, 7510, 7510. That comes to 0.82. 82,600 something it will become. Okay, 826, I don't remember exactly. No. Okay, you should calculate. Yeah, so this will be 9090, 9090, because 75,000 will be, again you are creating 75,000 plus 75,000, 7,510, correct, na? 82,610. Fine, 8260, 8260, 61 doesn't matter exactly. Okay, this will come to 90901 something it will come. Yeah, we applied. Say approximately maybe some 10 rupees difference, 1 lakh it will happen. Yeah, so now what is the provision balance on the last date? This is the balance of provision. Provision is increased. Last day, what are we supposed to do? You should make a provision payment. Provision account debit to cash. Yeah, make a payment because you are supposed to pay. Yeah, pay, correct? Like this you are supposed to do. If it is directly attributable to PPE, present valuation is necessary. Okay, present valuation is necessary. Then and present valued, correct na? And add it to the PPE. If you add it to the PPE, it should be depreciated as usual as per accounting standard 10. And with respect to the provision, what are we supposed to do? That will be unwinded. It will be increased. That's it. That is how it will happen basically. Okay, this is with respect to provision discussion sufficient. Yeah, now let us get into the next small topic, that is contingent liability. Yeah, contingent liability. Actually, for contingent liability, there are two definitions are there with respect to contingent liability. Any one definition it satisfied is a contingent liability. Right. What is the first definition? First definition, it says very clearly, possible future, correct, possible obligation. Read the words, language is important. It is a possible obligation. Possible obligation arising from past events. Yeah, what is it happening, my dear? It is a possible obligation arising from past events, right? And existence of which is confirmed by occurrence, or existence of which is confirmed by occurrence or non-occurrence of one or more occurrence or non-occurrence of one or more future events. Not under the control of the entity, which is not under the control of the entity. That is the first one. Observe carefully, my dear friend. It is a possible obligation is the word used. What is the word used? Possible. It is a possible word but not a probable word. First, correct? No. Possible means what? May happen, may not happen. Correct. And he did not say it is a present. Correct. No, he did not use the word present obligation. May use kiya. Means I don't know whether I am liable or not. That is the position. And it says very clearly, existence also I don't know. It depends. Existence of which is confirmed by occurrence or non-occurrence of one or more future events in the future. Future events. This is not under my control also. May happen, may not happen. Example. Very simple example. Suppose you gave bank guarantee. Yeah, bank guarantee. Otherwise, you give bank guarantee for somebody's loan. Yeah, suppose your company is A company. Okay, another company is B company. There is a bank. Okay, bank gave a loan to B company. A gave a guarantee to bank. In case B defaults, then I will pay you. That is what A said. So what is the loan repayment date? Let's say repayment date is 31st May. Correct. On 31st March, can the banker come to me and ask for money? No. When can bank come to me and ask? After 31st May only it can come and ask. After on 31st May, if B is not willing to pay or B defaults that payment, then banker will get the right to ask. Correct. So is it possible that B will not pay? Yes, it may happen. Correct. See, no, we don't know exactly what will happen. I gave a guarantee. Yes. Suddenly, yes, something can happen. B may not be able to pay it. When B is not able to pay it, then I am supposed to pay for it. That's what. It may happen. It is not guaranteed. No. Is it liability to me on 31st March? No, it is not a liability. That's why what do we say? Under all the circumstances, do not recognize provision. You should not recognize provision, my dear. Don't record for provision. Right, but what should I do? Yeah, you have to disclose it in the notes. Disclose in notes to accounts. Yes, you have to disclose it in the notes to accounts. If you disclose in the notes to accounts, is more than sufficient. But are you supposed to disclose? Yes, you have to disclose. Otherwise, what all the kind of agreements you have entered into? How does the members of, users of the financial statements will understand, my dear? Correct, no? You entered into some agreement. All of a sudden, that guy did not pay. Then 100 crore rupees ka guarantee de diya. 100 crore rupees will come on your head. That time will you tell the members a surprise, 100 crore loss? Right? Obviously not correct. You have to give them a caution. Inform them. See, this is what happened. Maybe some guys are not risk takers. They may find it's very dangerous that this company has got given guarantees to so many people, something goes wrong. They will jump from this company. Let them jump. That is, at least you should give the information. Truthful, faithful, reliable information should be provided. Correct? That is the reason. Next is what, sir? Next is nothing but it is a present obligation, it will tell. Yes, it will tell present obligation only. It is a present obligation arising from past events. Yes, you should listen fully. Present obligation arising from past events. Correct, na? But we are not able to make a provision. Not able to recognize a provision. Sir, why are you not able to recognize a provision, sir? Why are you not able to recognize a provision? Because other two conditions are not satisfied. Other two conditions not satisfied. Yeah, just now I told you when you want to make a provision, you should satisfy three conditions. If you satisfy all the three conditions, then yes, you have to make a provision. If you satisfy only one condition, there is a present obligation. Yes, there is a present. I understand that there is a present obligation, but I don't know how much I am liable. I am not able to measure it reliably. Other two conditions are what? There is probable future economic benefits, and it can be measured reliably. Right? I know I am liable, but I don't know how much. When you don't know how much, how can I make a provision? Yeah, that's it. Next, I know I am liable, but it may be possible that I will end up paying no money. Yeah, say example, legal case. Yeah, legal case may, yes, I know we did mistake. But yes, in case of law, what happens, my dear? Last minute, correct, now, till the judgment comes, it can be this side or it can be that side. Correct. Now, suppose your factory food, people have eaten and they have died also. Right. Now, lawyer will be presenting this. What lawyer can do? Lawyer can prove it. No, those guys died, correct. But it is not because of my product. They already had some other issues. Correct. Now, they had other diseases, something. That's why they died. It's not because of my product. Yeah, if you prove it like that, nothing is going to happen. It is possible. Yeah, I feel that they died. Fine. I felt present obligation, but I don't know. It may end up without any money. Then, fine. I don't want to make a provision. Only disclosure, if you can do it, that is more than sufficient. Yeah. Now look at contingent asset. Contingent asset. Yeah. With respect to contingent asset, contingent asset definition, there is only one definition, not like contingent liability, my dear. Yeah, but here the definition is very simple. What do we do here? Possible obligation plus may, we will just write possible asset. That's it. What do we write? Possible asset, and the remaining this definition will continue as it is. Possible asset arising from past events, existence of which is confirmed by occurrence or non-occurrence of one or more future events which are not under the control of the entity. That is the basic definition for contingent asset. Okay, what do you mean by that? Say example, simple example, I'll explain you. Okay, with respect to contingent asset, suppose we filed a case. Yeah, we filed a case on somebody. Okay, on someone. Yeah, we filed a case on someone. Fine. So they have done something wrong to us. Done. And now what is our lawyer is saying? Our lawyer says, Ravi, you are going to win. Yeah, you are going to win. 80% chances are there, Ravi, for winning. That's what he says. Okay. But when he says 80% chance is there to win, but there is a 20% chance to lose also. Correct. If I win, I will get money. Let us say 10 crore rupees, I will get money. Okay, as a compensation. Because I won, as a compensation, they have to pay me. Right. Listen carefully. Can I recognize this contingent asset based on the lawyer's word? Suppose if I want to recognize, what would have you recorded exactly? Yeah, you should record like receivable account debit to income. Yeah, 10 crore rupees is an income. It's a compensation income to you. Yeah, suppose in the current year, I will say, yes, receivable account debit to income I will record. But in the next year, suppose court said, hey, you shut up, that's all, you lost the case, you lost the case. In the next year, you got to know. Now what do you do? Already previous year books are closed. Now what are you supposed to do? There is a receivable balance is there, 10 crores in the balance sheet. Then you have to reverse it now. You have to reverse it means what? Again, P&L expenditure account debit to receivable, you have to record 10 crore, 10 crore. But see, what are you doing? Last year you took it as an income. Yeah, it is obviously income. You have to take it as an income only. You took it as an income, and people, your share value must have gone up like anything. Next year, court said, shut up. Then I reversed it. Now, share value is down. Who purchased the share in the last year? No, they became bakras only, na? Obviously. You're playing with it. Playing with the P&L actually. That's why what the standard says, array, contingent asset, even though 80% is probable, 80% is probable, yes, above 50%. Don't record it. Record only when it is certain. Certain means what? What do you mean by certain? Judgment should come out. Getting my point? Yes, judge should say that, yes, you won the case. Get the money, 10 crore rupees you collect from the other party. Then you're right. Certainty, that's why what do you say? Yeah, that's why what do you say? Recognize it as asset. Recognize it as asset only when virtual certainty exists. Only when virtual certainty. Only when virtual certainty exists. If there is virtual certainty, then you are supposed to record it. What is virtual certainty? Virtual certainty is a fact. It is not guess. It is a fact. Okay, there should be fact. Fact means judgment is the fact. Yeah, judge, I won the case. Then you record it. Got it? Right. That is how it is supposed to happen. Recently, in one company where I'm consultant for IND AS, okay, they got. They already paid some GST. That was about 4 crore rupees of money. Okay, they actually paid some excess duty money also, so not excess, service tax money also. They paid totally they paid 6 crore. Out of that, 2 crores related to service tax and 4 crore related to GST. They got 2 crore rupees of money. Yeah, the department said we'll give you. But with respect to GST, company is saying that we will get the money. Correct. They're saying we will get the money. But okay, they're saying they're getting the money. But what is the guarantee? Yeah? Last minute also department will say no, you go to court of law, I will not pay. Correct, no? Last minute, yeah, they may say with respect to service tax I paid, but with respect to GST I may not pay. Right. So that's why we said no, you should not recognize it as an asset and receivable. Okay, right. So they regarded it as it is. They regard as an asset. I told them not to record. They regard as an auditor also did not agree. That's the auditor has qualified to the extent because your income is overstated and asset is also receivable account debit to income means balance sheet asset also overstated and income is also overstated. It is like that. Right. When tomorrow if it comes, correct. Now tomorrow once it is coming, not record that day asset. Now who is saying no? Because you don't have virtual certainty, you're not supposed to record it. That is our point basically. Okay, right. That is, it should be fact based on real information. Not percentage or 90% or 95%. That is okay to say, but it is supposed to be fact actually. Right. That is contingent asset. Suppose what it says, if it is probable. Yeah, bola? If it is probable, sir, it is more than 80%, 90% information. Disclose it. Okay, where to disclose, sir? You disclose it in the board of directors report. Not in the notes on accounts even today. If it is probable, means above 80%, yeah, lawyer is saying 80% will win. Tell it in the board of directors meeting, board's report basically. That's it. But you are not supposed to present it. You are not supposed to recognize it. Only when it is virtually certain, then you record. That is our topic number 3 is over. Okay. Topic number 4, that is reimbursable asset. This question, they asked 2 times. They asked reimbursable asset. Reimbursement of asset. Okay. Reimbursement of income something. Yeah. Very simple. It is say example. My dear, I spent money on behalf of somebody. So what did I say? I spent money. I spent money on behalf of somebody. On behalf of someone. Yeah, on behalf of someone. Now the question. If they have very clearly said in the agreement that they are supposed to pay me. Yeah, they said very clearly, Ravi, you incur first, I will pay you later. Agreement may very clearly given. That means, is it, when I spend money, correct now, suppose I am spending money for X person. My company is Y. Okay. Right, I spent money, I paid something, okay, cash, to cash, okay, sir, 40 rupees I paid. Then what do I say? Receivable from X, correct now, X account debit 40 to cash. It is not my expenditure. I am spending on behalf of X. So X has to pay me, but right now I am paying the cash. I will collect. I have a right to collect it from X. So then I will say X is the X account receivable for T. Suppose in the agreement it is not clearly mentioned. What I say in the agreement it is not clearly mentioned. I am incurring for them. Okay. Can I say now that is X account debit X to cash? Unless until they confirm it, otherwise you cannot do it. That's why what do they say? Reimbursable asset also only when there is virtual certainty, not probable. Virtual certainty. When there is virtual certainty, then you recognize it. Virtual certainty is there, then you recognize it. Otherwise, you should not. Correct? Na? See, you spent money. Tomorrow they may say, "Hey, who asked you to spend? Did I say this?" They can say. They can go to court of law. I did not. I never told this to these guys. They only spent it. That's possible. That's why, my dear friend, you cannot recognize it. You cannot recognize unless there is a virtual certainty. Guarantee hai to record karo. Okay, right. That is a small topic. Okay, next is restructuring program. Restructure. This is also is given. See, this question was asked in exam for 2 times. I am telling you. Very simple. But if student knows that there is one reimbursable asset concept in accounting standard 29, then they'll actually mention very clearly, okay, this is coming as per accounting standard 29. Yeah, otherwise what do? They will not mention. Fine. Yeah, restructure program. Restructure program. What is restructure program? Restructure program, it's a plan. Okay, it is a plan. It is organized by what is that? It is planned by whom? It is planned by it is planned by whom? Sorry, it is planned by management. Yeah. What is this plan? As per this plan, there will be change in the scope of business. There will be change in scope of business. There will be change in scope of business. Right? That is one. At the same time, that means scope of business means I was doing something. Okay, I was selling, say example, 4 products I am selling. Now I am starting a new business. Next new product I am introducing. Yes, it is a restructure. Because of my plan structured by us, correct? There is a change in the structure. Or change in the manner in which I was, change in the manner in which I was doing, manner in which business was conducted. Yeah, same business only, but I am changing now. Oh sir, earlier I was selling wholesale. Now I made it retail. The other way, ulta. Anything like that. Okay, any change in the business basically which leads to a significant change in the scope of business and the manner in which it was conducted is changing. That is going to be. That means any product to change. Discontinuing operation, I told you. Yes, that is also part of restructure. Yeah, amalgamation is also part of restructure. Yes, it's obviously restructure. Starting a new factory, yes, restructure. You are selling one factory, that is also restructure. It is discontinuation only, correct. All these are coming under restructure. So what is this point is here, sir? Very simple. Yeah, because of restructure, are you supposed to make any provision? That is the basic doubt everybody will get. But there only one question. Whenever you want to make any provision because of the restructure, it has to satisfy as usual 3 conditions related to provision. If it satisfies 3 conditions, what are the 3 conditions? There should be present obligation arising from past events, probable future economic benefits outflow, and it should be measured reliably. When you satisfy all the 3 conditions, only then you are supposed to make a provision. Otherwise, you are not supposed to make a provision for this. Okay. That's it, my dear. We are through with the accounting standard 29. Yeah, now let us get into accounting standard 17. Okay, right. What is accounting standard 17, my dear? Segment reporting. Yeah, segment reporting. See, this is basically a disclosure standard. This is a disclosure standard. Sir, where do you disclose? We will disclose in notes to accounts. Yeah, what do you disclose? How many segments? That is segment information, basically. Segment information we are going to disclose. Okay, which segment? What do you mean by segment? what all the information do you disclose? That is what dealt by accounting standard 17. Yeah, I generally give one very small example. Correct. Say example ITC. What is ITC? International, Indian Tobacco Corporation. Correct, na? Right. That is ITC company, you must have heard. And this company is into what? This company is into hotels. Correct, na? This company is into tobacco. That is the first basic job. Correct, na? They are into FMCG. They are into paper. Correct, na? Yeah, you are purchasing those classmate books, notebooks. That is all by ITC only. And they are into many other things, etc. Correct. Yeah, tomorrow the company, suppose government of India banned tobacco. Nobody should consume. No cigarette manufacturing, nothing like that. Tobacco never happens. Don't worry. Okay, right. Suppose they said banned. Then how do we get to know? Correct. Now, suppose somebody who has purchased the shares of ITC company already, they will feel the pressure now. What pressure? The tobacco ban. Now what about the company? They will become panic, and in the panic situation only they will start selling the company share for very lower money. Correct. But if somebody wants to, suppose if you look at the profit and loss account of ITC company, what will be their revenue from operation? One number will be there. This number includes all this tobacco, one cigarette somebody purchased, that sales also sitting in this number. If somebody booked a room for one day also, that also is sitting it here. Yeah, you purchase some classmate notebook, that is also here only, nowhere else. Right. And if you see their profit after tax or profit before tax, this is including from all the activities. It is not just from only one activity. But I want to know, now the situation has come, tobacco is banned. Okay, how much was this company earning from tobacco alone? I want to know now. How do I know that? Then if you look at the profit and loss or balance sheet, you won't get that information. That's why standard is saying, you are supposed to give, what are you supposed to give? You are supposed to give full information about all the segments of the company. Yeah, how many? What is this? Is a segment. Yes, this is a segment. This is a segment. All different. That's why what is segment, sir? Yeah, what is segment means? It is distinguishable component is segment. What did I say? Segment is what? Distinguishable. Yeah, distinguishable component. Distinguishable component is called segment. Correct. Okay, this is a component means, again here what do we say? There are two different types of segments. One is business segment, we say. The next one is geographical segment. Yeah, geographical segment. If further geographical segment is going to be, again further is based on location. It is further subclassification. It is based on location of assets. Yeah, it is based on location of assets. Okay, and location of customers. Location of customers. Yeah, we'll discuss this little later, obviously now. Right. Okay, sir, you're saying business segment. What is business, sir? Business segment, yes, it is a business. It is distinguishable component. Distinguishable component is distinguishable in what, sir? Distinguishable component in products or services. Products or services from other services of the entity. From other services or products. Yeah, distinguishable component means I have one product. This product is different from other product. Okay, different in what? Yes, different in nature of the product, different in many things. It is not just only one. Not just only that, it is different in risks and rewards. R&R, risks and rewards attached to that product. Attached to that product means the risks and rewards attached to, okay, say I'm manufacturing I'm bottle manufacturing, I'm manufacturing mobile, both. Okay. Yeah, the risks and rewards with respect to bottle industry is different from mobile industry. Maybe the competition is different. Correct, no? Yeah, there is competition is different. Technology problems are more here. Yeah, this bottle, what will happen? Maximum model change will happen. Same item only. Correct, no? But in this, if you are not up to date with the technology and if you don't innovate the technology, then your business will be khatam. That's it. Got my point? Risks and rewards attached to with this. Correct, no? But in the same mobile thing, once you are successful, correct, no? Like you can earn like anything. It's also there. Got it? Right. So that's why, my dear, we are supposed to look at what are the risks and rewards attached to the product. Yeah. I mean, in the same example, see, tobacco is one product. Huh? Yeah. Yeah. All these products are different. Yeah. Hotel industry, hotel risks and rewards are different. See, now Corona situation is there. Who is going to hotel and stay there? The risks and rewards attached to that is different. Correct. But tobacco, whether it is correct, whether it is Corona or is kebab, no, we will obviously, I mean, not you and me, but okay, fine. People will be taking that. So that is always consumable. Correct. Paper also, yes. Now paper has a different risks because see now I have got computer now. I'm not writing on the paper. I'm writing in the soft copy. So paper consumption, because of the technology, paper consumption will have impact. Correct. Because of this impact, because of this technology, tobacco will not have that impact. Got it? Right. FMCG, that is fast moving consumer goods. It has its own risks. It's different. Correct. Now, one soap is there, one brush is there, something is there, toothpaste is there. All those things, some face cream is there, something like that. It is all FMCG products. That risks and rewards are different from other items, other risk, hotel industry, other items, risks and rewards. That is called business segment. Business segment is a distinguishable component. It is distinguishable. Distinguishable means different. Different in risks. Different in risk means products and services. The risks and rewards attached to the products and services are different. That is what we are trying to say. And what about this geographical segment you are trying to tell us, sir? Yeah. See, with respect to geographical segment, my dear friend, it is a distinguishable component only. Yeah, but this is with respect to area. Correct. It is distinguishable. The area means area where we are doing the activity, where we are doing our business. It is a geographical area. Correct. Geographical means obviously area. Correct. Doing where we are doing business. That means here also risks and rewards are there, but risks and rewards attached to that area where you are doing the business. I am in India. I have my business in US. Yeah, this is India, this is US. Right. The risks and rewards attached with business market. Okay, all right. Geographical situation. I mean location basically. Yeah, market. I mean my market is there in US. My market is there in India. The risks attached with Indian market are different from US market. Okay, but don't tell. Sorry, within India I have one Bangalore mein my office is there. Hyderabad mein my office is there. It is two different. No. Within India, so it is only one segment. Within India, it is one segment. Very rare circumstances may it can be two segments possible, but it is very rare circumstance. Remember. Okay, to confuse you, they may ask you in the question. We have one branch in Hyderabad. We have one branch in Bangalore. One more in Delhi. So what? All are within India only. Correct? Na? I am doing business. Correct? I am doing business in Hyderabad, in Bangalore right now. I can go and do business in Hyderabad also. I can come to Guntur also. Correct? Na? I can do. Who will stop me? Nobody will stop. But my point is true. Risks and rewards, but can I go to China and do it so easily? No, that business rules and regulation, that market is China market is different, Indian market is different. It is attached to the market basically. That is geographical segment. Risks and rewards, okay, suppose if my customers say 90% of my customers are in US, my risks are different. Why means tomorrow Trump says, correct, Trump says or somebody new, who is that any new president of US comes and says, no, you shouldn't sell to India, or if they increase their import duty, then there is a risk in selling outside India. Correct. Now maybe 10% only I am selling in India. Yes, you should inform this information to the members. 90% of my sales are going to US. That means if there is a problem with US, I mean, if US government bans it or UN government increases the import duties, then I will not be able to compete in that country. Correct. Got my point? Suppose I was selling to UK. Correct. Now, if you remember, there is one point like Brexit. Okay. Yeah. London came out of them. European Union. Earlier European Union is there. Now that's broken. Because of that, many of our Indian companies also lost the agreements. Correct. That area risks and rewards are there. Having customers over there is one kind of risk. Having the assets in that area is another kind of risk. Correct. Na? See, if you have asset, you may not be able to take out all the assets and come out. That is obviously that having the assets is one kind of risk. Having customers is also another kind of risk. That's why we are treating geographical segment is going to be further bifurcated into two kinds of segments. That is geographical segment based on location of assets, based on location of assets and customers. Okay, right. Totally means totally. I mean broadly. Broadly, if you see, there are three segments. One is business segment, location of assets, and location of customers. That you remember. Okay, sir. Sir, I have got different segments, sir. Very nice. So, shall I disclose all the segments? No, you should not disclose all the segments. Okay, what will be disclosed? Look at this carefully. What will be disclosed? Yeah, what will be disclosed, sir? Only reportable segment. Only reportable segment. Okay, not every segment is not going to be presented. No, every segment is not going to be presented in the notes to accounts. Only reportable segments are going to be presented in the notes to account. Okay, that means what is reportable segments? There are 5 conditions to it. Yeah, 5 conditions, not like exactly 5 conditions, all have to be followed. First out of 3, first 3, na, you should follow any one. And it can be 4th one or it can be 5th one is mandatory. Something is there, I will tell you that. Okay, yeah, if you satisfy the any one of or all the 5 conditions or whatever, something like that. Okay, right. If you satisfy 5 conditions, then it is a reportable segment. Only under that circumstance you are supposed to present it in the notes to accounts. Only under that circumstance you are supposed to present it in the notes to accounts. Otherwise, you don't need to present it. Say example, you are preparing a segment reporting. Okay, you are doing segment reporting. Suppose assume you have got some X segment, Y segment, Z segment, A, B, C are there. Okay, suppose these 3 segments satisfy the conditions. Then what do? I'll do like this: X, Y, Z. What about ABC, sir? ABC club karke I'll add everything ABC, my dear, and I'll just put other segments. Other segments I'll just put. That's it. This is total. Like that we'll do. Every segment of the company need not be presented. Only those segments which satisfies those conditions, only those that segments are supposed to be presented. That is called reportable segment. That is only called reportable segment, my dear. Got it? Done. Now the next question. What is the next question? Yeah, question is here. See, 5 conditions means what are those 5 conditions? Yeah, first condition what says? Suppose now we are testing whether X is a reportable segment or not. Now what do we say? If this X segment revenue is greater than or equal to 10% of all the segments revenue. What is that say? When segment revenue is greater than or equal to, okay, all segments revenue. Yeah, if it is greater than or equal, then we will say yes, it is satisfying first condition, then it is reportable segment. Correct. Sir, but what do you mean by segment revenue? There is a definition actually given. Okay, right. Which is that? First one is what? Which is directly attributable to that segment. What did I say? First point, which is directly attributable. Yeah, directly attributable. Say example, I have paper business like ITC has. I directly sell to customers, which I sold to outsiders. That is my paper business. 1, 2. Next, when it is allocable, allocable business also is this one only. Allocable business means what? Suppose we are selling some books, that is papers, plus something like chocolates or something we are adding together as a pack, we are selling it to customers. Correct. Right, books plus chocolates together is equal to 200 rupees I sold. Now what am I supposed to do? Chocolates is FMCG. Books is paper business. Now what should I do? 200 rupees of money should be allocated, should be bifurcated between these 2 segments on some reasonable basis. Correct. And the third one is intersegment. Yeah, intersegment. Yeah, means, okay, what is that? Paper business we supply to some hotel. Our own hotels only, we have another segment that is internal within branch, departmental sales, right? Yeah, one department is selling to another department. That is also part of my segment revenue. Okay, right. Remember, segment revenue does not include interest income. No way. Dividend income. No way. Okay, right. Profit on sale of investment. Yes, no profit on sale of investment. No, it is not going to be. These incomes are not going to be income. Interest income can be taken only when the segment is a financial segment. What is it, sir? Suppose I have one Tata financing company is there, correct? So Tata has finance business also. Yeah, like so Tata Finance is separate one. That is a separate business, separate segment. Like that, if you are into financing business, this interest, then interest income is that segment income. Otherwise, you should not take it. Got it? Right. Next, second condition is what, sir? Second condition is segment assets. Means which segment we are trying to check whether X is the segment, correct? X is the reportable segment or not. So whether segment assets are greater than or equal to all the segment assets. Yeah, if you total all the segment assets, then my respective segment is having more than 10% or equal to 10%. Then it is reportable segment. Sir, what do you mean by segment assets? Yes, this is also defined very clearly in that standard. Okay, what does it say? Segment assets means, operating assets of the segment. Yeah, operating assets of the specific segment, my dear. Only operating assets. Operating assets means what, sir? Yes, it can be a tangible asset or it can be intangible asset. It can be any kind of asset. Then, but it is operating assets which are used for the purpose of business or operations of the company. Okay, suppose you gave loans and advances. No, this is not operating. This is like financing activity. Correct, no? Yeah, and whatever investment you made, investment in shares, investment in debentures or something like that. No, these are all not going to be taken up. Yeah, and deferred tax asset and tax assets basically are tax advance tax basically, correct? No, this is also not going to be part and parcel of segment assets. You should not take it. And one more thing which you shouldn't take is HO assets. Yeah, HO assets. No. HO is not a segment. Okay, right. HO is just an office basically. It is going to coordinate the business. Yeah, head office. Correct. So HO assets also not going to be taken as this. Hope you understand. This is all not part of segment assets. See, that's why we have to remember the definition very clearly. If you don't know definition, last time when they asked, they gave like deferred tax asset, they included and they gave. But if you know that deferred tax asset should not be segment asset, then you will be deducting it and then you will be doing the calculation. Otherwise, you will be pakka doing mistake over there. That's why I told you, students, you have to concentrate on the definitions. Very, 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 very important. It is very clearly explained in my accounting standard made easy book. Correct. Whoever have purchased, those guys, you can ask them how is that book. They can explain. Correct. They can give what is the feedback they can give. Right. Third point is what? Segment profit. Yeah, segment profit. Segment profits means, what do you say? Absolute number we call this. Absolute number. What is absolute number? No sign is, without sign if you take it, that is called absolute. Even though there is a loss. Yeah, instead of profit, we use the word segment result we use. See, result means what? Results means what? It can be profit, it can be loss. Look at this is a little different one. Or it is greater than or equal to all segment. Yeah, greater than or equal to, I'll say separately like this. 1 second. Yeah. What are you supposed to do? All profits of all segments you should add first. Okay. All losses of the segments, all segments also you should add it. Okay, this is an absolute number. What did I say? This is absolute number. Means signs, remove it. Whichever is higher, that number you should say take. Okay, greater than or equal to what is that? Sorry, 10% of, I forgot to write. 10% of all segments. 10% greater than or equal to 10% of all segments. I'm sorry. Yeah, here also 10% of this number. Yeah, 10% of this number you should be taking it. Yeah, I say example I will give you. Suppose there is segment called A, B, C, D, E, F is there. Okay. Yeah, this is profit is positive, loss is negative. Correct. Now let us say this is equal to 50, this is equal to 60, this is negative, this is 20, this is 10, this is 10. Now what are we supposed to do? Add all the profits. Okay, all the profits will add 50, 120, 110, 120, 130. Correct. So we'll take it here. What do we take it here? Observe, my dear. Yeah, here I will take 130. All the losses is equal to how much? All the losses is equal to 100. Whichever is greater. What is greater? 130. Okay, 10% of 130. What is 10% of 130? 13 will come. Yeah, now we'll come to A. Yeah, A is 50 is more than 13, na? Correct. So A is reportable. That's it. B is 60. It is reportable. 80, sir. 80, correct. Negative, no. Negative just for totaling purpose. Separation purpose. Once you total it, na, all are in absolute number. Positives lena padega. 20 also fine. But E and F, na, it is less than 13. So these are not reportable segments. They are not satisfying the one condition. That's it. It may be reportable under other condition, but E condition is not satisfied. E condition is not satisfied. Hope you understood. Yeah, the next one is fourth one. Yeah, that is management discretion we call. What do we call? Management discretion. Okay, what do you mean by management discretion? Even though it does not satisfy above three conditions, if management feels that no, we want to disclose it separately, you can disclose always. It is management's discretion. Even though it does not satisfy above conditions, correct. Still management, no, this I want to show it separately. Show it. That's all. The management can make it reportable. Right. Fifth one, it is mandatory. Even though you satisfy all the four conditions, fifth condition is overall condition. What is this? This is overall we call it. It has to satisfy overall condition. What is it, sir? Yeah, the so far selected and reportable segments, external revenue should be greater than or equal to 75% of the external revenue of the company. External revenue of company. This is one point. I will explain you. Don't worry. Sir, what is it, sir? Very simple. Nothing much actually. Okay. Right. See, there are segments A, B, C, D, E, F, G. So many are there. Okay. The revenue means external sales and internal sales. Inter-segment revenue is also revenue. Just now I told you that. Yeah. Suppose, my dear, what is external revenue? Suppose you selected A, B, C are reportable segments we thought. Fine. The D, E, F are not reportable because it did not satisfy the condition. Now, what is external revenue of? External revenue of what? A, B, C, dekhna padega. How much, sir? Let us say this is equal to 100, this is equal to 100, this is equal to 100. But external revenue of all the segments is equal to actually 500. How much is it? All the segments is equal to 500. But 500 into 75% if I do, how much does it come? 500 into 75%. 1 second, yeah. 375, correct, no? Yeah, 375 will come. But which all reportable segments selected by us? ABC. So ABC total kiya to how much is coming? 300. Correct? Now, but what are we saying? The selected reportable segments external revenue should be minimum of 75% of the total. But it is actually not satisfying. So then what am I supposed to do, sir? What are you supposed to do? Na? Then add another 1 or 2 segments you add. Suppose D add kiya to 50 more will come, sir. E add kiya to 30 aayega, sir. Okay, then D plus E le lo. Then D plus E le 380. 380 means 380 is greater than 375, na? Sufficient. ABC alone external revenue was not sufficient. That's why we are supposed to take further more segments so that the external revenue which is reported should be equal to at least 75% of company's external revenue, total external revenue of all the segments together. Got it? That is the 5 conditions what we have discussed. Okay. Yeah, even though you have satisfied all these 4, you must have to satisfy the 5th one. You must have to satisfy the 5th one. Hello, understood, right? Yes. Now, okay, sir, I have segments, sir. One basic question will come. Sir, I have business segments are also there, sir. Okay, I have geographical segment also is there, sir. Sir, which one I should present it? That's why what the standard is saying, out of this, what is primary segment? You have to further classify. Yeah, out of business or business geographical segment, which is primary, which is a secondary to you. You should decide it. Yeah, sir, how do I decide which is primary, which is secondary? That is a purely professional judgment. Yeah. So means management should sit and understand which is crucial segment for them. Means how do they take the decisions? Do they take the decision based on the performance of the products or performance of the area? Suppose Apple company is there, Apple Incorporation. Apple company customers are there all over the world. Correct. Next, Apple company has got the products, so many products, you know, iPhone is one, MacBook is one, correct na? iPad is one, iPod is one, correct na? I mean, so many things are there, you know that. You know much better than me, actually. Fine. So now the CEO of the company, how will he assess the performance? How will he assess means, will he get the information of product wise information will he take or area wise? एशिया में performance कैसा है, US में performance कैसा है, ऑस्ट्रेलिया में कैसा है? How will he actually analyze it? How the company is taking the decision? Sir, we most of the time we look at the products, sir. Then I say your primary is equal to business. Got my point? Right. So once you say this is primary to me, then the remaining is secondary to you. Okay. Yeah. If I say like business is my primary, okay, fine. Geographical is my secondary. Geographical secondary means geographical based on location of assets, location of customers. Together is equal to secondary to me. Got it? Done. At the same time, my dear friend, this also you should remember. If it is a primary segment, you have got 9 points to disclose. Yeah, what are to disclose, sir? What is your external revenue? What is your internal revenue? And inter-segment sales. Internal means inter-segment sales. Correct, na? What is your segment profits? You have to disclose. Segment expenses not required. Segment profits. What are the segment assets? What are segment liabilities? Okay, what are the current year segment assets purchased? How much purchased segment assets recently? Correct. Any depreciation and other what is that non-cash expenditure? Non-cash expenditure like that. So many other information you are supposed to give it. But once you classify any segment as secondary, this is little information, not too much information. Basic information. Some 3 points are approximately 3 to 4 points are there. 3 to 4 point disclosure is required, sufficient. Okay, this is I have covered almost every important point of accounting standard 17. Okay, now we are looking at accounting standard 24. Yeah, because standard 17 and 24 both are linked ones actually. That's why if you do immediately, this 24 is very small standard. Yeah, this is very small standard. Again, this is also discontinuing operations. Yes. Yeah, discontinuing operations. In this discontinuing operations, my dear friend. Okay. Yeah, first of all, this is also a disclosure standard. Yeah, it is a disclosure standard. This is also like no accounting, no recognition and measurement. No, we are not discussing how to measure it, nothing like that. Okay, first I will explain you what is the basic objective of the standard in 2 minutes. Then we will go to the standard is very small standard, I told it. Okay, right, discontinuing operation. Suppose I have a segments called A plus B plus C segments are there in the previous year. Okay, done. Okay, current year what I decided, in the previous year there was no decision. In the current year what I decided, A segment I decided to sell it off. That means in the future, but in the as of 31st March have you sold? No, I have not sold. Discontinuing, just not yet continued, correct na? Discontinued nahi hai idhar, discontinuing, correct na? Right, it is not yet happened, it is happening. But listen carefully, if you decided to sell A, means pakka decision. It is not like just thought of. No, not thought of. Board of directors have taken a decision and a binding agreement entered, something like that must have taken place. Correct. Okay, now if I disclose, now that's why what the standard says. If you have decided, then when you in the P&L statement, what are you supposed to do? when you say revenue, na, you should tell the information of B and C here. Even plus B and C only should be given. Previous year A plus B plus you must have given. Now previous year financial statements are supposed to be restated. Okay, what is the profit? Profit also you should tell only B plus C here. Yeah, sir, I got profit after tax. Correct. Now you tell some number, you got it. Now you tell discontinuing operation. Now you tell A information here. Correct, na? See, total also will give anyhow. Suppose example, this is equal to 100, this is equal to 200, now this is 300. Say this is 80, this is equal to, let us say this is 100, this is equal to 180. Okay, example. Now, if people will look at the financial statements, na, okay, they have got current year 300, correct. But next year, they are not going to have this A. That means 200 income is not going to be there. If anybody wants to purchase the company share based on this continuing operation. That's why continuing operations, discontinuing operation. If you club and show 380, suppose if someone looks at only, suppose if you have not presented like that, you presented like this 300 and 180. What people will feel? Wow, last year 180, current year 300. Super profit here, isn't it? Then automatically they will purchase the company shares. Next year these guys will sell off that company shares. Correct? Dhamal share value is gone down. Correct? Na? Then we are making them bakras. If you have very clearly decided from the date, from the year in which you decided, na, from that date say only presentation should be changed. Which all you are going to continue, that should come on the top. After profit, after taxation, after PAT, correct, na? After PAT, then you add the which are expected to be discontinued, I mean decided to be discontinued, that thing only should come. If you don't present like this, it will mislead the users of financial statement. That is the objective of presentation, basically. Okay, what do they say? This is okay. Yeah, discontinuing operation. What do they say? First definition in the sense it is a separate component. Yeah, what they say, component, it should be a segment, basic thing. It should be a segment. A distinguishable component is distinguishable segment. Segment means which segment? Yeah, segment can be a business segment. Segment can be a geographical segment. Any segment is fine. But again, remember, it need not be reportable segment. What did I say, my dear? It is need not be reportable. Means what? I have a very small segment is there, sir. Hardly 5% of entire company. I decided to sell. Fine. Still you are falling under accounting standard 24. That segment which you want to discontinue, you wanted to sell off. Correct, na? Discontinue means what? You are planning to sell. Yes, you are planning to sell. Yeah, there should be sell. Correct. Now we are not going to do that activities. Not going to do that same business. That business. We are not going to be in that business in the future. Okay. Yeah, you are selling it. It may be a small business. It may be big business. But it is a segment. Yes. Segment means a distinguishable component which has different risks and rewards attached to the product or attached to the location. It may be geographical or it may be business segment. It should be segment, but it need not be reportable segment. I mean to say, it need not satisfy the 10% criteria, 75% criteria, nothing need to be satisfied. Okay, this is a distinguishable. Okay, distinguishable. Yeah, this is distinguishable in for financial reporting purpose. Financial reporting purpose and our operation purpose. Yes, we know this is separate, sir. For operations, your activities purpose, we are saying, right? It is distinguishable. Or for financial reporting purpose, it is distinguishable. Very good. And it is you are selling as a single plan. Okay, you are disposing as a part of single plan. You have a plan to sell. As per the plan, we are just selling it off. Okay, single plan could be what? Yeah, sell it entirely as one. Entirely means enter into an agreement with one party, binding agreement, sell it off. Right. Suppose what is that say? My paper business. I want to sell it off to somebody. Sir, I have paper 4 factories are there, sir. Okay. 3 factories I am selling, sir. 1 factory I am continuing, sir. Then you are not discontinuing the business. You are doing maybe scale of operation must have come down, but you are still in the same business. Then discontinue. This accounting standard 24 is not applicable. I have 4 factories, sir. All 4 I am selling, sir. All 4 I am selling. Then fine. Then come to accounting standard 24. You must not be in the same business after this. Same business mein nahi hona. Okay. Sir, I have pizza corner, sir. 100 pizza centers are there, sir. Okay. Yes, very good. 1 pizza center I am selling, sir. But you are in pizza business still, na? And then accounting standard 24 is not applicable to you. You must be discontinuing the business. After this activity, you must not be doing the same business. Then it is yes. Then come to my stand. Otherwise, not required. Okay. Done, sir. Yeah, it may be entirely I may be selling. It can be even like example demerger. Yeah, demerger. In accountancy, you must have learned what is demerger. Okay. Yeah, demerger means what? One company is broke. It is opposite to merger, my dear. One company is broken into 2. E company is selling one business to another company. Fine, that is also you are discontinuing. That means whatever the company, old company is there, that is discontinuing from the business. That's it. That is also this one. Or it may be like piecemeal. Okay, na? Piecemeal. Piecemeal means you know, right? Piecemeal means suppose I decided to sell, sir, but nobody has come to purchase from me, sir. Then what am I supposed to do? Building, I'll sell it to one guy. Okay, machinery, I'll sell it to one guy. Office mein computers and etc. I'll sell it to one guy. Cars, I will sell it to another guy. Like that, pieces, I will be selling it to different parties. You decided to sell as part of single plan. You may be selling all together to one party. You may be selling piece like that. And next one is called abandonment. Abandonment. Sir, what is abandonment? Abandonment means for the time being you're stopping the operations. Abandonment means what I said, stopping the operations. Stop operations. Yeah, stop operations today right now. But with an intention to not resume, with an intention to sell in the future. With an intention to sell in the future. Yeah, then only it will come. But if it is intention to resume later, then it is not discontinuing operation. Okay, see, I'm doing some activities. I'm producing. I have one factory. Okay, fine. I said stop doing activities. Means we are stopping the production. We sent all the employees and everybody home. We pay by paying something. Sir, are you selling this building? No. Now I am not selling. Why, sir? Sir, now nobody is coming and asking. So then what is your plan? After 6 months, when the rate goes up, that time I'll sell it. Then fine. It is discontinuing operation. Right. Suppose you are stopping. Sir, why are you stopping? Now no business, sir. After 6 months, I will start once again business. Then it is not discontinuing operation. Okay. Right. Sir, you told disclosure. Correct. We told disclosure. Listen carefully. This is first point is initial disclosure event. With respect to this, initial disclosure event. Okay. Initial disclosure event. Listen carefully, my dear friend. With respect to initial disclosure event, actually it was asked in the examination some 1 or 2 attempts before. Directly ask you what is initial disclosure event. Whenever the company enters into a binding agreement, what do you mean by binding agreement? Company has to sell it to other party has to buy it. Yeah, binding agreement to sell the segment. Yeah, if you decided to sell and you already entered into binding agreement, or that date, the date of binding agreement, or second point is what? Board of directors took a decision. This passed resolution. Board of directors took a decision and they have notified. I mean, they have announced. Announcement is also made. Announcement made by board of directors. Board has taken a resolution, and as well as board has done. Board has announced the same also. Board decided and said, E date. Which date? Both should happen. Not suppose board has taken on 28th February. February means 2nd, right? Okay, but board has announced on 28th February. Correct. Which date I should take? 28th February. Both the things are have taken place on which day? This date both are happened. Announcement also took place and board of directors decision also taken place. Out of this, which is earlier date? Which is earlier? That date is called initial disclosure event. What is this date? That is called initial disclosure event. That date, what are we supposed to do? We have to disclose it. Yeah, even though 28th February we are not preparing financial statements, my dear, you have to give a notification, like at least newspaper may notice, then some notice should be given to the public, all interested parties. Interested parties means lenders, suppliers, employees. Yeah, suppose you have a segment called ABC. You decided to sell C. Inform those employees of the employees. We are going to sell the, I don't know how you are going to that, whether the next company is going to take you or do not take you, I don't know. You have to inform them. Correct, na? Next, yeah, tell their suppliers, na, you don't produce too much next, because they, whom I am selling, that guy may purchase from you or may not purchase from you. Correct. I must have taken a loan based on the C segment. I should tell the banker, I am selling this segment, don't worry, paisa aayega, paisa I will give it to you. Which segment are you selling? Who is getting affected because of this? Correct. Now, for how much money you are going to sell? In which way are you going to sell? Correct. Is it piecemeal? Is it entirety or abandonment? How are you going to do it? All that is supposed to be disclosed on this, whichever is earlier date. You have to inform to the interested parties. That is very, 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 very important point. Got my point? Next. So that's all. No, not that's all. Okay. Say 28th February is happened. Correct. Na? But complete sale has happened. Let us say 30th August sold off. Yeah. This day entered into agreement. Not sell happened. From the date of initial disclosure event till the completion of sale. Whichever the balance sheet date comes, it may be 1 day balance sheet may come, 2 balance sheets may come, correct? Na? So 31st March 2020 has come, sir. On this date also they have given some 6 to 7 points are given. That information is also supposed to be disclosed by you. Got my point? Right. See, today, so I have explained the 5 standards. That is accounting standard 4, 5, 29, 17 plus 24. Yeah. So if you like this video, please comment on this, share it with your friends, let that be useful to your friends as well. And I told you I opened one discussion, accounting standard discussion group. Yes, you can be part of the discussion group and ask questions, we'll answer you. Okay, right, my books are available in ravikanthmiriyala.com. Yes, people can order those books if whoever they wanted. At least inform your friends, you must have bought it, I know that. Alright, for your friends, please tell them that there is some, what is that website? Okay, and subscribe to the channel so that you will be able to, you will get the notification whenever I upload a new video, then you will get the notification. It will be useful to you for sure. Right, I'll come out with the rest of the standards in some time.